I want to share with you the cold hard truth about how he actually made all of his money, because he said many times over that his father gave him a $1 million loan and he turned it into billions, but is that actually true? Well, today you're going to find out. So before we get into what the media has withheld about Donald Trump, or what they've said that's not necessarily true, I want to go through his backstory really quickly, rapid fire. So his grandfather emigrated from Germany in the late 1800s, named Friedrich. His last name was actually de Rumpf back then, not Trump, but he anglicized it by the time he came here to America. Then he went up to Canada and the Yukon during the Klondike Gold Rush, and he opened up a brothel. It's here that he made a lot of money. Like someone that sells the shovels during a gold mine, those are the ones who usually make the money. Well, where are they going to go for entertainment? A brothel. He then had a son named Fred, where he passed on some of his money and all of his business acumen that he learned through those businesses. It was after World War II in the late 1940s that Fred had a really great break by taking advantage of the Federal Housing Commission to build apartment units for Army veterans and public housing. And he did this by buying a plot of land in Brooklyn that would soon become the Beach Haven property complex with 2,500 units. And what he did here was very clever. He created 5 trusts, one for each of his children, Donald being one, and he created a ground lease and signed ground leases to each of the trusts. And what a ground lease is that the land and the properties built upon the land are owned by 2 separate parties. So he basically gave the ownership of the land to the trust. So the renters of the apartment building would pay the landowner into the trust, which would be his kids. And this is a lease term for 99 years. That's usually how long the ground leases last for. So for the next 99 years, $65,000 was put into the trust. And Donald was only 3 years old at the time. So if you do the conversion for inflation back then in 1951, Donald, by the age of 8, would have been a millionaire. After some years, paying a normal mortgage to banks, he created what's called a family mortgage, in which the interest payments would be paid into another trust. So his children, yet again, would become more or less the bank in a way. He did this 14 times over in Staten Island, Brooklyn, as I mentioned, and also in Queens. Then in 1995, Fred set up what's called a Grantor Retained Annuity Trust, also known as a GRAT for short. And what this meant is that it would basically sign over the assets to another party, aka normally your children, without encumbering a lot of taxes. He strategically undervalued all of his assets because allegedly they were worth about $1 billion in 1995, but in the 2 years it took to complete these GRATs, they divided up the assets, undervalued it significantly, and instead of paying $500 million in tax, they paid closer to 50. He had 7,500 apartments under his name, and he claimed that those were only worth $41 million on paper, which was far from what it was worth because Donald, only 8 years later, sold these apartments for $670 million combined. So it's safe to say that Donald didn't start with just $1 million and turn it into billions. He had quite a bit more than that to start, and he was also partnering with Fred, his father, in a lot of his early real estate deals. Now let's talk about Donald. His father actually advised Donald not to venture out and do business in Manhattan, and yet that's where Donald pretty much did all of his business that made him the big bucks. At just the age of 30 in 1976, he purchased the Commodore Hotel for $10 million in partnership with the Hyatt, where they both combined put in $70 million in a humongous renovation, which led to a 40-year tax abatement that Trump negotiated in the deal. This meant that because of the large renovation and the $1.5 million debt that the Commodore Hotel was in at the time, Trump basically was able to avoid paying taxes for the next 4 decades for the hotel. But as we'll see going forward, Donald didn't really use much of his own money for any of these finances to construct these large towers. He used investor money, and he also used junk bonds. Now I'd like to share what the media has neglected to tell us the truth about for many years. At least this is my understanding. They claim that Trump went broke, was bankrupt, many times actually, more than twice, more than 3 times. I believe 6 times. Trump went broke and had no money. That is false. That is a false narrative that the media has pushed for a long time. And I want to tell you how that is a false narrative. It's because Chapter 7 bankruptcy, the bankruptcy we're taught in school that is very negative. You have to sell everything you have. This is called liquidation, where you're insolvent. You have no money to pay back what you owe. So you have to sell your assets, your house, cars, any other assets. This is Chapter 7 bankruptcy as an individual. This is not what Trump went through because that's personal bankruptcy. Trump's companies claimed bankruptcy, Chapter 11 that is, and there's 3 major factors here in Chapter 11 bankruptcy when you claim it that are actually quite advantageous for business owners and companies, and this is one of the reasons that Trump actually became a billionaire. And these are debt restructuring, where you can renegotiate the terms of the loans and help reduce immediate financial pressure. Number 2 is it allows the business to continue as normal, which helps preserve the company's market position and their long-term viability. And third, an automatic stay, which halts all collection actions, lawsuits, and foreclosures against the company. You can see how this is different than the bankruptcy we're taught in school, and how the media portrays Trump as someone who's very poor at business and has gone bankrupt and shouldn't lead a country because of his past actions in business. That's not the case. That's called manipulation, and they've done a very good job at it. The first bankruptcy that the Trump company went through was in 1991, just 2 years after the Taj Mahal Casino Resort had opened. It took $1 billion to build. This was a big deal. But much of this deal was purchased through junk bonds, also known as high-yield bonds. Despite the higher risk, junk bonds offer higher interest rate to compensate investors for the increased risk. There were definitely investors that lost big money investing into these high-yield, high-risk bonds, but without these bonds, Trump's buildings would not have been built. This is because junk bonds provide Trump with an access to large amounts of capital, allowing him to fund his ambitious projects without relying solely on traditional bank loans, and especially his own money. So in this case, for the Taj Mahal Casino, he was unable to pay the high interest rate on the junk bonds used to finance the resort's construction, and was forced to surrender half of his ownership interest in the property to the bondholders in exchange for their acceptance of lower interest rate payments. Ultimately allowed him to maintain control and benefit from future profits of the business. So even the year later, in 1992, at the Plaza Hotel claiming Chapter 11 bankruptcy, Trump had already learned a valuable lesson. Because at this point he was already a billionaire, and he filed for bankruptcy protection. Yet again, this was another restructuring of debt in which he owed $550 million. He gave up a 49% stake in the property this time to Citibank and 5 other lenders, but he kept his post as chief exec without pay and no longer had day-to-day operations with the luxury hotel. But it still allowed him to make money off of the future operations of the hotel and the sale. The same went for the Trump hotels and casino resorts in 2004 that also declared Chapter 11 bankruptcy, as well as the Trump entertainment resorts in 2009. I have all the specifics and the numbers, but the bankruptcy talks are not fun. I just wanted to talk about the meat of how this guy made so much money. But more than anything, it was his reputation of being a successful businessman in the eyes of people that allowed him to get bailed out and become on the winning side of a lot of these collapsing deals. You would think a lot of people would take the stress personally and fold, but he did the absolute opposite. He actually went out on top and became a billionaire because of these bankruptcies and the strategies behind getting money that wasn't his, putting it into something large like a financial structure, or putting it into a large project like building a hotel and a casino, filing for bankruptcy, and then being able to renegotiate the terms of that loan of money that wasn't even his. And then he was able to sell these properties at the end, reclaiming a profit. He made $427 million from 2004 to 2017, which is The Apprentice. He still makes money from licensing his last name. The Trump organization makes $1 to $5 million per deal, depending on the size of the contract. That's it for this video, guys. Thanks so much for watching. Hope you learned something. We'll see you in the next video.